Semiconductor design company Qualcomm reported fourth quarter 2024 financial results on Wednesday, November 6th. The stock price jumped following the announcement. Qualcomm was one of the companies that I had rated as a buy going into the earnings release. Remember, I typically say that when you're thinking about buying a stock before or after earnings, I usually say it's better to wait until after earnings, unless the company is so undervalued that I feel there's more upside than downside. And Qualcomm was one of those situations where I felt the stock was so undervalued, I should say, that it made sense buying going into the earnings release. So in this video, I'm going to review the company's latest financial results and update that recommendation and let you know if I still have it rated as a buy or if I'm changing that recommendation. So let's take a look at this company.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
All right, so Qualcomm CEO saying that we are pleased to conclude the fiscal year with strong results in the fourth quarter, delivering greater than 30% year-over-year growth in earnings per share. This is non-GAAP earnings per share. They continue to extend their technology leadership and positioning themselves well across handsets, personal computers now, automotive, and industrial Internet of Things. The reason I say those earnings numbers were non-GAAP because if you look at GAAP earnings per share, it increased by a lot more than 30%. It was actually up by 96%. The difference between GAAP and non-GAAP is the company makes adjustments to put the results on more equal footing. So if there is some one-off event that happened last year that depressed earnings, and then when you're comparing this year's earnings to last year's earnings that had that one-time event that lowered their earnings, that would make this year's earnings per share look a lot better, the growth look a lot better than it actually was. And so with this adjustment, it brings down the growth year over year to 33% instead of 96% with the adjustment. Now, they don't always do these adjustments, and sometimes the adjustments make the company's earnings per share look better than they were. And so it's generally, I advise investors to follow the GAAP numbers. Management teams will provide you the non-GAAP numbers with adjustments, but I generally follow the generally accounting accepted principles for the numbers reported. And so looking at those, Qualcomm reported 19% increase in revenue to 10.2 billion in the fourth quarter, and earnings before taxes increased by 83% to 2.6 billion. The company's growth was similar if you look at the full year results, delivering 9% increase in revenues and 39% increase in earnings before taxes. If you divide the earnings before taxes of 10.3 billion for 2024 with the revenues of 39 billion in 2024, you'll see the company generated an operating income of over 25% operating profit margin and growing. So that's a good sign for investors looking at this company that had been stagnant for some time, and now it's generated more growth in these critical financial metrics. And unsurprisingly, the stock price jumped following the earnings results. You can see that big jump here from $166 a share all the way closer to $190 per share. And then the company's stock price coming back down, retracing some of those gains. It's now trading at $174 per share. So a little higher than it was going into the earnings release. Stocks have been volatile following the results of the US election and the potential outcomes for geopolitics and trade and tariffs and things that could impact companies like Qualcomm, which depend on outsourcing their manufacturing outside of the United States. So there's an added risk factor now with Qualcomm, considering the results of the US election. Looking ahead, the company is forecasting first quarter 2025 revenue in the range of 10.5 billion to 11.3 billion, about 11 billion at the midpoint. So sequentially, quarter over quarter growth. So the company expecting the excellent growth rates to continue here, with non-GAAP diluted EPS in the range of $2.95 and GAAP earnings per share at $2.49 at the midpoint. Looking at the company's cash flow from operations over the trailing 12-month period, which ended September 29th, 2024, Qualcomm generated $12.2 billion in cash flow from operations, up from $11.3 billion in the same time the year before, roughly 10% increase. The bulk of the increase coming from increases in net income, which is where you want to see the increase. And the reason why it didn't go up as much as earnings per share is because you had some of the changes in net working capital accounts work against Qualcomm. For instance, if you look at the accounts receivable, last year that was a net benefit for the company of nearly 2.5 billion. This year it was a negative for the company of 768 million. So if you're in business, you know accounts receivable, right? You sell something to a customer and you let them owe you the money to receive, right? They might pay you in 30 days, 60 days, or 90 days. And so this is just the timing of those payments received. And last year it had a benefit because it received a lot more of those payments than it let out in accounts receivable. And this year it reversed a little bit where it allowed more accounts receivable and the timing of those payments were not in the current 12-month period. So Qualcomm is now trading at a forward price to earnings of 14.06, which is still near the lowest this stock has traded for in the last year. Or I shouldn't say near the lowest. It's about in the middle of where this stock has traded for in the last year. Of course, it was trading at near a forward PE of 20, and the valuation had come down heading into the earnings release. That's why I had recommended it as a buy heading into the earnings release, or one of the reasons why I had recommended it a buy heading into the earnings release. I've had it rated as a buy all year long in 2024. And now that it's trading at a forward PE of 14.06, I still like this investment risk versus reward on the current valuations. So to update my recommendation of Qualcomm stock, I had it rated as a buy. I last updated it on October 28th. I'm updating it again today on November 7, reiterating that I think this stock is a buy for long-term investors. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.